Would you like to have a two-fund portfolio that can beat the S&P 500? I know what you're thinking. There's a lot of great ETFs on the market that you could hold. I mean, you have some great growth ETFs like QQQ, VUG, SCHD. There's some great stability and blue chip stock dividend ETFs like SCHD, DGRO, and even FDVV. So when we're looking at different ETFs to create this two-fund portfolio, we need to see if we can have enough growth and enough stability to outrun the S&P 500 in good and bad times. In today's video, we're going to add some of those favorite ETFs together to create a great two-fund portfolio. That means we're going to be adding VGT, which is an awesome tech ETF, with SCHD, which is a great dividend ETF that's providing some stability. Hey guys, my name is Steve, and I run the Frugal Expat website, where we try to help people to save more and invest better. And in today's video, we're going to be talking about how to invest better. So if you like this content, make sure to hit that like button and subscribe. And we'll continue to create great content to help you to do better. All right. Like I said, today's video is about adding VGT and SCHD. And why are we doing that? Because VGT is a great tech ETF that has risen in great bull markets. SCHD, on the other hand, is a great dividend ETF that provides stability when market downturns. It provides great dividends when markets are up. And it's just a great all-around dividend ETF to help your portfolio. So what we're going to do is we're going to break down VGT, SCHD, and then we're going to do a back test against one of the best ETFs, one of the best market things, which is the S&P 500. And we're going to see, will it sustain, will it beat it, and what you should do when you're creating a great two-fund portfolio that you're going to like. All right. Let's get started. Now, VGT is the Vanguard Information Technology ETF, and what it does, it tracks about 316 to 320 different technology companies. In this holdings, it's comprised of about 3 or 4 that kind of make up about 50% of this ETF, and that is Apple, Microsoft, and Nvidia, with Broadcom as well, bringing up that percentage to almost 50% of the ETF. So if you like these companies, this is a great ETF to get a lot of exposure. Now, it's got some great other companies like IBM, it's got Palantir's in this, it's got Visa and Cisco Information and Cisco Technologies. So what we're trying to do is trying to create an ETF that kind of surpasses everything else. Now, this ETF does have an expense ratio of 0.09%, which means it's going to cost you about $9 for every $10,000 invested. Now, over the long term, in the last 10 years, it has had a performance of 19.32% over the last 10 years, which beats QQQ, which has had a performance of about 17.3% in that same time period. Now, right now, year to date, VGT is down, which means it's a good opportunity to buy some, because when ETFs are down in price, that just means it's on sale. It's just a little bit cheaper. Now, when we're looking at VGT over the long term, we want to see if it's be able to sustain itself. Well, it's been around since 2004, so it's hit down markets like in 2008. It's in down markets in 2018, 2022, but each time it has done much and much better. So if you're looking for a great technology ETF to hold in your portfolio, VGT is one of those great ones. Now, if we look at bringing in some stability, we're going to look at SCHD. Now, SCHD is a Charles Schwab U.S. Equity Dividend ETF, and what it does, it comprises of about 101 different dividend companies. These are companies that are producing and growing their dividend over the last 10 years consecutively. And what they try to do is every year they do a reconstitution to create a great portfolio according to their metrics. Not any holding in this ETF is holding more than 4%. So you're having some great competition between each other, and you're not allowing one holding to take up too much space. and that's good news for you. Now, the dividend yield is about 3.6%. It's got an expense ratio of about 0.06%, so that means it costs about $6 for every $10,000 invested. Now, it grows its dividend yield about 11% over the last 10 years. Now, that doesn't mean it's going to continue to grow it every year like that, but it's got a pretty good rate of return, and it's grown its dividend for 13 straight years. It's been around since October of 2011, so that means it has seen ups and downs, and it does pretty good when you're comparing it to the S&P 500. Right now, year to date, it's over 1% compared to the market, which the market is down 4%. So SCHD is holding its own when market downturns happen. That's because it's comprised of some great blue chip stocks creating stability, and if the price of these blue chip stocks does go up and down, the dividend still stays stable. So you're still growing your money and you're still receiving those dividends even though the market goes up and down. Now, we have some great tech and we have some great dividends. Now, why is this a great two-fund portfolio? Because first of all, when you take it and you look at the overlap, they only overlap about 3%. That means they only have about 3 companies that are in both different ETFs. It doesn't have that much overlap. That means you are having some great companies and holdings in both that don't overlap, which is good news. If you were to have maybe a modern portfolio, you could have a lot of overlap that could happen between the tech and maybe the S&P 500, and a little bit less when you're talking about a good dividend ETF. But with this one, this two-fund portfolio, not having much overlap. Now, another good thing about this is it allows it to have a lot of growth when the bull market runs, and it's also got a lot of stability when a big drawdown happens. If you were to rebalance every single year, if the tech does go up, you could rebalance and kind of put more money into the dividend ETF. And if the dividend ETF were to go up a lot, you could rebalance. Now, if we were to take a look at the back test of this against maybe a modern portfolio and against maybe an S&P 500, you'll see that this two-fund portfolio will do better than both of them. And not only will it do better in growth, it will also do better in drawdowns. So that is good news to you. So let's take a look at this back test. Now, when we're looking at this back test, we're going to have 3 different portfolios. We're going to have one that's got a little bit of everything. We're going to have one that's got 50% in SCHD and 50% in VGT. We're also going to have more of a modern portfolio with about 33% in SCHD, 33% in VGT, and about 34% in VOO. So let's take a look at this those portfolios and kind of see what's going on. So this first portfolio, it's doing just okay. It's about even. And we take a look at the SCHD plus VGT portfolio, the VGT plus SCHD portfolio. We're going to see that it's up about 3.4% compared to the S&P 500. And then the modern portfolio with those percentages doing 33, 33, and 34, it's about 2.3% above the modern portfolio. Now, if we take a look at if we put $10,000 in it with the SCHD plus VGT or the VGT plus SCHD portfolio, we're going to see after about 10 years, it's got about 17.69%. In the modern portfolio, about 16.57%. And we see the S&P 500 is about 14.29%. Now, we're going to see that the best year is about 37, almost 38% compared to 31% of the S&P 500. The worst year is about 16.46%, while the worst year of the S&P 500 is negative 18.17%. So that's good news to you. Now, if we're looking at these two things, we're trying to see that these two ETFs combined together is going to beat the S&P 500. And that's great news to you, because if you're looking for a portfolio to beat the S&P 500 and you're looking and you're young and you want some growth and you want some stability, well, this is a great two-fund portfolio. I mean, VGT plus SCHD will do better, much better than having just VOO. Now, if you want just a great core, VOO is a great core ETF to hold in your portfolio and to create a great 3-fund portfolio. Now, recently I talked about a great modern 3-fund portfolio, and you guys can check that out. I'm gonna put a link in the description and probably put a link at the end of the video. But if you're looking for a great 2-fund portfolio, having VGT and SCHD is a great way to create that 2-fund portfolio. All right, that's just a little bit about that, and those are just some great ETFs to create that 2-fund portfolio to beat the S&P 500. If you're looking for another great 2-fund portfolio, right here, up here, I'm going to put up SCHG plus SCHD, and those are 2 great ETFs to make another great 2-fund portfolio to beat the S&P 500. All right, we'll check you out on our next video, and you guys take care and stay safe.